Alright everyone, and welcome back to the channel for another Bitcoin update. So, for the past few months, I've been talking about the ranges between 16,000 US dollars all the way down to 14,000 US dollars. I've made many TA updates in the past few months talking about why I think these regions are in play. I'm not going to reiterate these, but what I'm going to do today is I'm going to jump into two fresher perspectives. We're going to be looking at some typical Elliott wave theory, and then also looking at the Bitcoin price drawdown from the all-time high, and a counter argument as to why we could have already bottomed according to your typical ABC corrections in Elliott wave theory. So, couple of different things to go through today. Let's jump right into this. I'm going to give you my exact US dollar price target right down to the dollar on where I think Bitcoin and Ethereum are going to bottom. Let's jump right into this. Alright, so where is Bitcoin moving to next? Let's start off with that by jumping into our first chart and looking at the Elliott waves for Bitcoin. Now, what we've got is basically your all-time high up here, and what I've been calling for a while now is your 5-wave correction. Now, before we jump into this, let's address the whale in the room. A lot of people who understand Elliott wave theory are not always the biggest fans of hearing that we could be in a 5-wave correction in a bear market. In fact, I've had people outright say that it's impossible to have a 5-wave correction after a 5-wave impulse. I mean, as you can see, if we come over to BTC here, so you've got a slightly clearer view of what is going on, you can look at these with all the market cycles, but all of the market cycles move like this. You've got a bear market low, this is your start, you have a 1-wave impulse, 2-wave correctory wave, 3-wave bullish impulse, 4-wave bearish correctory wave, and you top out on your 5-wave impulse, and this is when everyone in their NAN is expecting an ABC correction, and according to this typical ABC correction, we should now be starting, or we should soon be starting our first 1 wave, and this is kind of one of the bullish scenarios that people are looking out for. Something like this, where the downtrend is already done and we should be now expecting new moves to the upside, because we've always had ABC corrections in bear markets, right? No, we haven't always had ABC corrections. If we come back to 2011, you can see this was very undeniable. This was an ABC correction. If we go over to 2018, you can clearly see this wasn't a 5-wave. I mean, most of the data was traded above the A. You can very clearly see an A, B. You spent absolutely ages breaking down, but you finally had your C wave back down in 2018. But what's interesting is, come over to 2015 and you'll see Elliott wave theory is not always as black and white as you think, and yes, you can have 5-wave corrections. Now, another argument for this, another thing that people might be looking at is, okay, yes, there is a 5-wave correction here. Surely this wasn't after a 5-wave impulse. Well, let's find out. So you've got your bear market low here. You can see once again after that ABC correction, 94% retracement. You've got your first run to the upside. You've got a 1-wave, 2-wave correction. 3 waves are meant to be euphoric. So this is clearly not your wave 3, wave 4 correction. This was your wave 3 up here. Had a nasty correction back down to wave 4. And then you had a blow off wave 5. So you can very clearly see this is your typical 5-wave bull run structure, and you can go through every single bull market and you can see that we have these 5-wave impulses, and most of the time, and by most of the time, we've only had 3 bear markets, so I'm saying, you know, approximately 66.66 recurring, we should be expecting ABC corrections. But, you know, as you can see over here, this was not an ABC correction. Now, I've looked at this many different ways. Originally, when I looked at this, I thought, you know, okay, very simple, A, B, C. You can discount this, you can discount this move. This is clearly one big move up, one big move down. But the problem with this is you're negating this entire move at the start, and I've actually had to negate this, and you would also have to be negating this move. Now, let me show you what these two individual moves did. From the top, you'd be looking at about a 64% retracement. After that retracement, you had about 120% pump. After that, you broke down, and you can see, once again, this was about a 72% pump, and you're ignoring all of this if we're just calling this a typical ABC correction. So, in my opinion, ABC really does not work on this. If you look at the Fibonacci's for a lot of these were beautifully called as well. So, in my opinion, there's really no doubt in my mind that this was a very clear 5-wave breakdown. Within this, you you had bear flag, breakdown, bear flag, breakdown. And this reminds me of exactly what we're witnessing right now over on Bitcoin, where we're clearly not doing the previous 2018 bear market where you have a support floor, you break beneath it, and it's a very quick capitulation. You know, we've been having, you know, bear flag after bearish pennant over here, after bear flag breakdown. This is exactly similar to what we saw over in 2014. So just wanted to get the whale out of the room. 2014, 2015 bear market, we very clearly had a 5-wave correction to the downside after a 5-wave impulse. So when we look at what we've got going on right now with Bitcoin, this looks, you know, exactly right to me. And even if you were looking at the 2014, one other thing I've done is I've looked at the individual waves within these waves, and it doesn't exist in the ABC correction. So if we do go over here, 2014, what you will notice is if we do zoom into this, you can see very clearly from the top, 1, 2, 3, 4, 5, come up for your A, B, C. After this, 1, 2, 3, 4, 5. And then you've got a very clear A, B, C. I mean, all of the wave counts are here. So once again, 1, 2, 3, 4, 5, bear market low is in. So this 5-wave structure is absolutely perfectly accounted for when you are looking at the Elliott waves. And we had an 87% correction within that move. Now, we're doing the exact same thing now, and I've previously talked about this, but if you go into this 5-wave, you can clearly see this is not a free wave. You've got your individual wave counts for every single one of these moves. Every single one of these has their own ABC correction. Back up to the upside, you can see we've colored this one differently over here. You've had your ABC, and now according to this fractal, in the immediate short term we should be moving back down to the downside. Now you can also see this does look very reminiscent of a bear flag. I'm actually going to make a separate video about that in its entirety and what I think is going to be playing out in the lower time frames. This is a higher time frame video, but as you can see, according to this fractal, we are in that final move. You know, this is the final wave. As you can see, this is the 4th wave. We're coming down now to finish the 5-wave. If we clear this up, you can see we had a nasty move back down. In my opinion, this was clearly your 1 wave. We're waiting to top out on your 2. We should then be coming down for your 3, 4, and of course coming down to that bear market low round about that 16k is obviously, like I said, where I've been calling for. Now, I'm not going to give you my exact price target right now. I'm going to save that for people who do stick to the end of the video. But what I do also want to show you is Ethereum, because Ethereum is exactly the same in this. Now, when you clear up the Ethereum chart, you can see from the lows, you've got your 1, 2, very euphoric 3, very typical of Elliott wave theory, but then you had a very boring stagnating 5, which really didn't push up too much, and this is exactly what Bitcoin did. Once again, you can see that your 3 wave was right here, and your 5 wave literally only made it like $1,000 or so higher. I mean, yeah, really a couple $1,000 or so, not an impressive move, and this is exactly what we're seeing over on Ethereum. Now, when you do zoom into Ethereum as well, it's a lot more black and white in Ethereum. Now, if you were looking at Bitcoin, sure, you could be saying, hey, I can argue this is an ABC correction. I'd be in disagreement. But what's going on with Ethereum right now is it's just not an ABC. It's very clearly not an ABC. We very clearly haven't bottomed. We're absolutely overextended on pretty much every metric. From your lows of this bear market, we're still holding the 786 Fibonacci. So we are going to be bottoming beneath $1,100. Like, that is just, it's just a given in my opinion. But when you do look at this correction, once again, this is not an ABC. We're still in a bear market in my opinion. So this would be your 1, 2, 3, 4, and I will be giving you my exact price target for Ethereum. I'll give this to you now. Where I think Ethereum is going to be bottoming is round about that 1.236, $605 on the mark. So let's see how well that prediction ages. If you do remember, if you're a veteran of the channel, you would have remembered I've personally been predicting these ranges. There were Fibonacci's backing up these between the ranges of $626 all the way down to where I previously said I think we could be bottoming round about that 511. I just find there's a good amount of confluence around about that 605 region. So I'm going to give it to the 605, 620 region, as there's a lot of support built down at those lower ranges, but that my friends, is where I think Ethereum is going to in the short term. So we've talked about, once again, I don't want to do a deep dive into the Ethereum Elliott wave theory. I just really wanted to give you my target for Ethereum. We've talked about the Ethereum Elliott wave theory. We've talked about the Bitcoin Elliott wave theory, and I will be wrapping up this video with my exact price target for Bitcoin. But let's move on to our next chart and look at the price drawdowns from the all-time high, and you'll be surprised how well these tie in to our Elliott wave theory. Alright, so let's move on and look at the Bitcoin price drawdowns from the all-time high. Within this segment, I'm going to be looking at both the Glassnode Studio visualization chart for this, and then I'm also going to be moving on to my own chart on TradingView, where I've pulled up the precise measurements from the all-time high to the all-time low. It's a little bit finicky to try to get the exact valuations looking at this, but this is a beautiful visual cue. So let's start off on Glassnode Studio. What you see here is the Bitcoin price drawdowns from the all-time high in pink. What this basically means is as these pink lines start to move to the bottom of the screen, to the bottom of the chart, we're having more of a brutal price drawdown from the all-time high. Now you can correlate whereabouts we are in terms of the drawdowns on the left side of the y-axis, so you can see roughly in our 2011 bear, this was approximately like a 93% drop. The next drop over here was approximately 84, 85. I'm going to show you the specific drops over in the next chart, but what I do want to show you here, we can even get rid of the price chart. I want to talk about a very, very simple trend that we've got on the Bitcoin price drawdowns from the all-time high, and that is the fact that we are in a very clear linear uptrend, meaning you've got your all-time lows down here in 2011, you've got higher highs, you've got higher highs. Even coming into the 2020 capitulation, you had higher highs. Now, when we do move over into what we've got right now with the current bear market that we're in, if we're obviously following this trend, we should be having less of a drawdown from the previous all-time high. So let's talk about potentially our best case scenario and our worst case scenario in terms of the price drawdowns from the all-time high. Now, first bear market, 2011, we had approximately a 94% drop. 2014 bear market, 87% drop. 2018 bear market, we had a 84% drop. And coming into the 2022 bear market, so far we've gone down about 74, 75% already. So let's look at the trend. What you'll see is, once again, like I said, we started at 94% corrections and we moved on to 87% corrections. Now, this is not a precise math. For example, if you were actually typing this into a calculator, it'd be a slightly different valuation. But this is approximately, can't emphasize that enough, this is approximately a 7% decrease from what we had in our first bear market low. So we had about a 94% drop in the first one, then we had an 87% drop. So as a whole, looking at the entirety of the move, this would be approximately a 7% decrease in terms of how bearish the bear market was. Now let's move on to the next cycle. 87 from 84. This was once again another minus 3% move. Once again, very clear visual trend that you can look over here on Glassnode, and you can see these higher lows playing out in the Bitcoin price drawdowns from the all-time high. I'm really not going to focus too much on the 2020 capitulation, more so because I'm looking at bear markets. I'm not looking at black swan capitulation events, and we're clearly in a bear market right now. This is not a quick black swan event like we saw back here, but nonetheless, just if you are curious, from the top up here down to the low, we corrected about 63, 64%, and we've already corrected more than that. So once again, this really works a lot better when you are looking at what is going on in terms of the bear market structures, bear markets, instead of just black swan events. Now, when we do come over to this bear market that we're in right now, sure, we could potentially have already bottomed. I don't think we've bottomed, but nonetheless, I can't deny that it is a possibility we could have already bottomed at a 75% correction from the previous all-time high. Now, this would be a huge, huge leap from what we had back here. An 84 all the way down to a 74, and this is, round about that 75. So, this is about a 10% drop. In fact, this is about an 11% drop, which is very, very brutal. Now, let's just call it a 10% from this move over here. it does not make sense to me how we are going to be moving from, you know, a 7% bear market decrease, a 3% bear market decrease, and then all of a sudden we're just going to jump up and completely deviate from this previous trend, and we're going to bottom miles and miles and miles above where we are. Obviously, this trend is not going to last forever, but judging with the way the economy is right now, judging the way the Bitcoin charts look, just judging by everything in the markets, I don't think that's going to be happening. So what I would be saying is, and then this is going to come into where I actually think Bitcoin's going to bottom. So this is the exciting part. What is my exact US dollar bottom for Bitcoin? Well, veterans of the channel already know that it's between 16,000 and 14,000. If we pull up our Fibonacci's on your, what was this, your 1, 2, 3... So your 3 to 4 wave, you'd be looking at the 1.236 Fibonacci coming in at 15,782. So to make it simple, let's just say I'm predicting the bear market low to be in between the ranges of 15,800 and 16,000. So in my opinion, this is the specific area, the exact area that I think Bitcoin is going to be moving down to and bottoming. Do not be surprised if Bitcoin overshoots that and heads down to 14k. I've been saying this for a while. 16 to 14k is where I would be absolutely aping in. I would not have all my money on the sidelines waiting for 14k. Like I've been saying, as soon as 16k comes, as soon as 17k comes, I'm going to be aping in with a decent amount of my portfolio. So what I'd be saying is, in the short term, yes, we can have a few more bounces on the way down. We talked about this in previous episodes, and it looks like we are having a tiny bounce while we're forming this bear flag. I'll talk about that in a separate video, because no decision has been made yet, not too time pressing. But once again, my friends, round about that 16,000 region, that is exactly where I think the bottom is going to be. Precisely 15,800. Let's call it at that. So we've looked at the Ethereum targets. We talked about, obviously, my $600 price target for ETH. Talked about my $15,800 price target for Bitcoin. We looked at the price drawdowns from the all-time high. You can still see that we are in a nice uptrend on the linear scale for this, and as you can see, once again, I marked this target specifically down here at 16k. Let's move it down to 15.8, which was the precise target that I actually gave you. Where would this be meaning that Bitcoin could potentially be bottoming around? This would only be a 77% drop from its all-time high, and bear in mind the previous drop we had was 84%. So this is a massive difference. This is way less bearish than we've seen in previous markets, and we're literally in a recession. We were not in a recession back here. So in my opinion, even more of a reason why we could be coming down to some of these lower price targets. Now I'm interested to see, while we wrap up this video, what would a 14k correction be? It'd be down here at around about an 80% drop. So if you come down to 14k, it's going to be an 80% drop, and this is where, you know, at least according to this linear uptrend that we've got, looking at the price drawdowns from the all-time high, this is a more likely region that we target. But I personally don't think that we should really be targeting that low. But that's just my opinion. Nonetheless, as you can see, previous bear markets were 84%. If we come down about 83%, you could potentially be seeing 11,600, 12,000 Bitcoin. It is a possibility. I don't want to say it's not a possibility, because we are in unprecedented times right now, my friends. But with that being said, I have a very clear price target that I am willing to put a large amount of buy orders down, and that is going to be between the ranges of 16,000 to 14,000, 15,800. Let's call it that. I think we're going to bottom very close to that target. That's basically all I've got for you today, my friends. One last honorable mention is the SPX Fractal. I'm only going to spend 20 seconds on here. Let's just jump right into this. On the weekly time frame, you can see if we do go back to this previous 2007-2008 bear market, this was the last major recession we had. Copy and paste the data bars, or copy and paste the candle bodies, should I say, and this is the fractal that we've got. If you go over on my YouTube, you can look at this. 12 days ago, almost 2 weeks ago, we talked about how we should be topping out in the next 2 weeks. 1 week ago, I said, I think we're going to be topping out, you know, this week. And then we gave you an update on this. We gave an update on this recently. It was in one of these videos over here, but nonetheless, what you can see is it's really starting to play out. You know, this was where we were talking about the top being, and we've started to come down pretty harshly for the stock market. I still think the stock market is very bearish. As you can see on the weekly time frame, it's all that matters. If we look at the white lines, all of these white lines, at least for the next few weeks, should be having lower highs and lower lows. So as long as we don't get above 43,300 for the SPX, I imagine we're going to top out somewhere around about here. Next week we're going to break down, probably going to pump back up, lower high, lower high, lower high, and keep on doing this type of choppy chart pattern as we're coming down for the SPX. But like I've been saying for the past couple of weeks, I think the SPX has already topped out at this moment in time. So really all I've got for you today, my friends, just a couple of different scenarios playing out here. But like I've been saying for the past couple of months, everything I've been looking at points towards a 16,000 US dollar Bitcoin. So all I've got for you today, my friends, and as always, cowboy out. Peace.